Alrighty traders, George here. Winter solstice and time to take a look at the balance beam throughout 2016 here. For you subscribers that have been getting these trade signals in advance and then seeing the follow through, I want to show you a couple things that have caught my eye here as I close down for the year. And I just want to say this has been a great year for the balance beam and the whole process of having new clients come into the mix, whether they're subscribers or whether they've got the charts, and seeing them learn and appreciate and own the process to basically push out everything else and only follow this methodology here that we use for trading around the balance beams. One of the things I always talk about is that having a small risk and a relatively large target comparatively to what most people are doing, and keeping the trade count down in a big way, is the best way to trade, period, over and out. But it's also the best way to grow a smaller account. More traders are focused on more hyper day trading, and when you start to do that, the amount of losses that you're likely to incur will impact a small account much sooner, and it really puts the probability against you in terms of growing a small account. So with the balance beam process, one of the things that I wanted to address were traders that had smaller accounts that would be able to participate in some of these bigger moves in a gradual, slow, controlled fashion where they have a much better chance of success. So with that in mind, I've got a couple things I want to show you guys here that will just put a great capper on the year and just send you into 2017 with even more belief behind the process here. We haven't had as much trigger here in December. We had a couple early on for some small gains across the board. We had a few more middle of the month, and as we close out what we looked at yesterday and the calls that went out on Monday, that put up just a couple $100 more. But the great thing is we just got over the round number of 70,000 for gain on the year. This is for the single contract per market performance for the markets called here for a single contract per market approach to trading the signals that all went out as part of the subscriber series. So I just want to give you a little bit of a behind the scenes look at some of the performance metrics here for the balance beam. For the subscriber series, these are all trade calls that go out towards the beginning of the week with the idea for single contract folks to be out by midday Friday, and whatever sets up, sets up. The gain on the year, as you just saw, was $70,484. As that goes, it was 299 trades that made up all of those gains. Of the weeks that you saw with the gray highlight bars on the Excel sheet, there are 49 weeks cataloged. 46 of those weeks were winning weeks. Only 3 weeks were losers. Okay, the largest weekly gain was $5,680. The largest weekly loss was $500, which means there was only 2 other weeks where we had losing amounts, and obviously they were less than $500. That might be the most amazing metric out of this in its entirety. The largest intra-week drawdown we had was $1,160, but that week actually finished up $550. The number of underwater weeks that were recovered into the green were 25. So about half of the entire year at some point was underwater before it finished in the green. That's another testament to the power of the balance beam. The average gain per trade was $235. The average gain per week was $1,438. The markets we traded were primarily oil, gold, and the NASDAQ, with a few forays into the Euro, the Dow, and the S&P. The hold time for all of these trades was intra-week. So the trade calls would go out anytime from Sunday Globex to maybe midday Tuesday at the latest, with the idea of being done by Friday at midday for the single contract approach here. The elements of success to all of this, I just put this together a second ago, and I thought, well, if I'm going to be efficient about this and very minimalistic, for starters, and we made jokes about this in training yesterday, the balance beam location is the #1 thing. Just like real estate, location, location, location. We know where, price level wise, where the most trading intensity is. Not just trading commitment of volume, but trading intensity in terms of the amount of trading activity that goes on. And we make trades around those areas. The position handling is not the same for every trade, but there's always some form of dynamic risk control, and this allows us to preserve our profits. It allows us to reduce the risk on some of the losers, and ongoing throughout the year. Obviously, it's done a fantastic job for us. The other element of success here would be the targets, which is the inverse of the location. The balance beam targets gives us great insight to where we're likely to go, the possibilities that exist. The visibility to see that is something that most traders don't have. Obviously, it has done very well for us. And then roll it all together, methodology driven, not systems based. So this is a series, a basket of case building things we always look for. We always look for the same things over and over again. It's not systems based, which means we won't have the same efficiency of loss that a system has. Just about every system you can come up with, let me know if you come up with one that doesn't do it, but at some point the mathematical leverage you get from a system will start to work in the inverse, and it will start to book some pretty big losses in a hurry. Most traders are not adept enough to be dynamic to pick up on that and switch things around, but by being methodology driven, we're able to sort of surf through that crushing wave that can take a lot of systems based traders out. So those are the 4 elements of balance beam success right there. There's really nothing more than that. When you guys subscribe and you get onto the website, just to drive this home again, on the subscriber page you see the trade calls. So everything that has happened has been cataloged and sent out to you guys in advance. On the foundation page you'll see summary videos for what happened for the last week or two, or whatever the time frame is that I'm cataloging here. But the bottom line is we have the before and we have the after, the setup and then the follow through. That builds even more belief. You can also get quite a bit of education from seeing what those trade calls were, what the target spread was, how that was derived, what kind of position handling we had, and then what the follow through was. Thanks to everybody for all the nice holiday wishes. Merry Christmas and Happy New Year to you all. It's been a great year. Have a great holiday break with your friends and family, and we'll look forward to seeing you all back in the room next year.